How are you gaming out the president's strategy here on trade and tariffs versus the market's decline?
Well, I think the first thing we have to accept is that we don't think this is really about kind of framing a deal. This is really, there are some substantial disagreements, namely around how to codify forced IP transfer disallowance and how a deal ends vis-a-vis, do tariffs come off immediately as the Chinese want, or are they staged off over time? I think those are real issue disagreements. The U.S. and China are pretty far apart on both of those. So that means I think you've got one or two outcomes here. We think the slightly more likely outcome is that in several weeks' time, the U.S. and China will find a way to compromise, but it probably gets prodded along by weaker risk markets, or they can find a way to compromise, and risk markets obviously have to sell off further, because then we're going to be dealing with tariffs on $325 billion worth of goods, roughly half of those finished consumer products. The impact on the U.S. economy is sort of more acute, more immediate. So either way, even that sort of slightly more likely outcome we're talking about, it's still going to weigh on risk markets.
I mean, over and over again, Jeff, we hear the U.S. has the upper hand. Look at the markets. Look at the economy. Ours is outperforming theirs. They get hit harder. Should investors take comfort in that idea?
I don't think so. When I think about who has the upper hand, I think about the possibility of, say, you have two prize fighters who fight for 10 rounds, and one wins by a single point, and both of them spend 3 months in the hospital. Who's won in that scenario? I don't think anyone's going to win out of this scenario. This is lose-lose all the way around.
Yeah, Jeff, following up on that, though, this idea that the Chinese could become sort of more nationalistic in their tone and even translate that into some action. We talk about boycotts. We haven't seen anything like that yet. Does that become a possibility as this goes on?
It definitely does. There's been a major change that needs to be noticed within the past day, because the Communist Party's propaganda department every day calls the media to tell them what stories to cover and with what tone. So the articles that we've seen within the past day are very intentional. They are a high-level change of policy. There's precedent. You can look at 2012 with Japan, 2017 with Korea, where there are not just official actions, but there are investigations, boycotts, protests, even violence. I'm not saying we're going down that road, but I am saying that this change in tone is the first step in that very unfortunate path, and I hope that China, just as they thought carefully about this message, will think very carefully about where it goes, because when those sort of events unfold, very hard to undo the consequences.
We were mentioning sort of the nationalist tone that their state media at least has taken. And they don't reference, as far as I've seen so far, don't reference specific companies yet.
Yeah.
But if that were to happen, how quickly does the street take down numbers on individual names?
Yeah, I think it would happen almost immediately. And I mean, this is in a broader context where Morgan Stanley thinks that the equity market is a little bit overpriced coming into all of this and priced to perfection on this outcome. Mike Wilson, for example, thinks that we're about 5 to 10% overestimated.
We well know.
Right. So I think that hit would be pretty short term. And of course, it is totally possible that both sides could undertake these sort of non-traditional measures. I think one thing that's sort of under the radar here is that the U.S. has increased its own activities with regard to sort of non-tariff barriers. The new CFIUS reforms that came through last year are already starting to interfere in some ways in multinational transactions. So that's a feature that's probably going to endure one way or another that we have to account for, but certainly that's part of another ramping up if this thing goes on for the rest of the year.
If it looks like it's working to the president's mind, does that mean he's more open to taking on the Europeans and cars, for example?
I don't know that these things necessarily influence each other, with the exception of the idea of a market feedback loop, right? So to the extent that markets are lower, we think that kind of changes the payoff in the president's mind of having a deal with China and the payoff in general of escalating further. And so, markets lower might sort of help defer auto tariffs. But, in lieu of that, we think that the U.S. is pretty axed to go ahead with auto tariffs. And that's mostly because they're at an impasse with Europe. They want to talk about agriculture. Europe doesn't. The impulse of the U.S. is to escalate in those situations.
Jeff, what does that look like? If we do impose those tariffs on imported cars, how does Europe react, respond? What about the economy?
Well, they're going to respond very negatively, and frankly, the best and most effective strategy for dealing with the China situation is for us to unite with Europe. But Europe cannot do that for reasons like this involving the cars. And that's just going to gum up our relationship unnecessarily and cause enormous problems exactly when we don't need them. We don't need to be picking fights with all of our allies when we have real differences with countries like China.